companies we look at, definitely we look at businesses which have long-term growth potential, businesses which can protect margins both in a down cycle and earn superior margins in an up cycle, and also we definitely focus on the quality of management and their attitude towards minority shareholders.
What about picking up mid-cap banks in this sort of a market environment?
Valuation metric does not change depending on the size of the bank. The metrics are the same. We focus on things like price to book and return on equity for mid-cap banks as well. Within the mid-cap space, again, there are old generation mid-cap banks and newer generation mid-cap banks. We are partial to the newer generation mid-cap banks because they seem to have built a fairly good liability franchise and also a retail portfolio. But we also have some old generation private banks where we think because of change in management, there is a re-rating opportunity going forward.
Do you think that the scope of banks getting re-rated is more prominent or more prevalent in the mid-cap universe?
I think so, yes, because the growth potential for some of these mid-cap banks is much more, and some of them are changing color in terms of what they're trying to do. So from a very low price to book or low price earnings ratio, they can get re-rated if and when the strategy works out.
Right. Pharmaceuticals is another theme that is very prominent in this fund. Which segment of pharmaceuticals are you most bullish on? Generics, patents, healthcare, retail? They're very niche businesses within the sector.
If you look at the mid-cap pharma space, there are not too many companies which have IP related revenues. Most of them are generic players. There are a few MNCs in the portfolio, MNC stocks also in the portfolio. So we are partial to good quality mid-cap generic players, Indian generic players, and also companies like Pfizer, for example, which is an MNC where the cash generation is so great that we think that it looks more akin to an FMCG company than a pharma company.
The next fund is Franklin Prima Plus, which is a large cap and a mid cap fund. What is the large cap to mid cap ratio that you keep in this fund at all times through cycles and through the kind of sell-off that we're seeing in the market right now?
The overall focus is to give exposure to the large cap space as far as the investor is concerned. But we think there are very good opportunities in the mid cap space where there are quality companies, and we've tried to give them some exposure there as well. So if you look at the fund over a period of time, the mid cap exposure has averaged between 20 to 25%.
Right, but what is the focus more on at any given point in time, risk or returns, or does that keep changing given the mandate of the fund and given that there is exposure to both the large cap as well as the mid cap space?
I don't think it's an either or kind of situation. We have to look after both risk and return. So risk adjusted return is what the focus is on.
Right, and what is the expectation on that front? Is there a benchmark that you follow?
We do have a benchmark. Obviously, the fund, given the fact that there is some mid-cap also in the portfolio, should do much better or relatively better compared to a large-cap portfolio in the long run.
Energy is a mainstay in this fund. What has been your approach towards some of the energy names? Because it runs the regulatory risk. Within the segments that are there, upstream companies, downstream companies, gas utilities, where is your interest right now?
We have some exposure to the resources space. For example, stocks like Coal India or GMDC in this fund. Apart from that, we do have some exposure to some of the stocks in the downstream space, OMCs. We think that OMCs have been beaten down quite a bit, and there is some value there.
Do you think there's potential of re-rating there as well, given all that's happened over the last 2 months with the price hikes and the talk of complete deregulation?
It's a very tough question to answer. It's like waiting for Godot. I think there are a lot of things the government has to do for the re-rating to happen. But having said that, some of the OMCs have managed the cycle quite well, and valuations seem extremely attractive.
So you're building positions in oil marketing companies?
We do have some exposure across portfolios.
The next fund is Franklin Smaller Companies Fund, which is a small cap fund. What I've seen is over cycles, this fund has been able to at best match the returns of the benchmark. Is that a conscious strategy, given the volatility and the risk that small companies come with?
Clearly, I think we expect to do much better than what we've achieved so far. It is navigating the small cap space is tougher than navigating the mid and large cap space. So we've had some issues in the kind of stocks we've invested in the past. We are trying to correct that, and hopefully it will lead to better returns going forward.
What is the strategy with managing the fund right now?
The strategy is to not spread our investments across more number of names. It is strategy is to have a more concentrated portfolio. Strategy is to invest in stocks which have a cash generation potential with low leverage and which are a play on the domestic theme.
I see interest in stocks such as Pidilite Industries or a Berger Paints. Paints as a sector has been drawing a lot of interest in the market. What's been the philosophy or your rationale behind picking such stocks?
Both these stocks which you mentioned, interestingly, are a good way to play the real estate theme. Instead of playing the real estate companies, one way of playing the real estate is through paint companies, for example. And if you look at almost all the paint companies in India, they've capitalized on the boom in real estate demand. Pidilite, again, given the strong brands it has, like Fevicol, again is a good way to play the real estate theme.
Also across your funds, not just for the smaller companies fund, but across your funds, I do not see much exposure to autos, which is also touted as a big consumption theme. Two-wheelers or four-wheelers. I see more exposure to the auto ancillary space. Why is that?
There are quite a few auto ancillaries which have pricing power. And again, taking exposure to the ancillary space is a good way of playing the auto theme as such. And if you look at our portfolios, we have exposures to companies like Bosch, which has strong IP, and that helps to earn above average returns.
But you don't see value in autos right now? It's not a sector which is high conviction?
We do have some exposure, but again, auto is a theme where, over the years, if you looked at our portfolios, we've never been overexposed.
So how has this out-of-the-box thinking helped the performance of the equity funds at Franklin Templeton? Dhirendra Kumar of Value Research will join us on the other side of this break. For that and more, stay with us.
Every morning, investors are looking out for opportunities. Make the most of the market day with ET Now. At 7 a.m., wake up to fresh brokerage and nifty calls on Morning Mantra. At 8 a.m., get buy, sell, hold tips for a profitable start to your day on trading calls. At 10:30 a.m., pick the hottest stocks from a technical perspective on Hot Stocks. At 11 a.m., watch market experts play the game of portfolio building on the stock game. Stay ahead of the markets, only on ET Now.
Are you running your business or simply running? To make your business big, enroll in Businessman Ki Pathshala. Run by the guru of SMEs and FMBs, Jagdish Joshi. SMS JJ at 575758 or log on to jagdishjoshi.com.
Welcome back. You're watching Meet Your Fund Manager, and we're discussing the equity schemes of Franklin Templeton Asset Management. Joining me on the show right now is Dhirendra Kumar of Value Research to discuss some of those schemes. Dhirendra, thanks very much for taking out the time. First up is Franklin India Blue Chip Fund, which is the oldest private sector equity fund in India. What is your view on the fund's performance and the way the portfolio has been managed?
It's an outstanding fund. 5 years back, it lost its momentum, but it has regained that, and I like this fund for its style purity. It has been a large cap fund for many years now. It started in 1993, and since 1996 it articulated that it will be a large cap fund, and it has remained one. The quality focus of the fund is also likable, and that is the reason why in a racy market this fund struggles, or it did struggle in say the period 2005 to 2008. But that apart, I think going through full market cycle, it's an outstanding large cap fund. Most investors getting started with mutual funds should have it.
The next fund is Franklin Prima, which is a small cap, mid cap fund. What is your view here?
Prima has been a disappointing fund. I think its best years were 10 years back, and since then it has been an average or little above an average fund. So I would say that in the mid and small cap category, there are way too many superior options. That apart, I think this fund's aversion to trying out, this Franklin Templeton has not ventured into the questionable part of the market, or taking bets, taking risks of a kind which other funds have. So its focus on quality has been a drag on performance here. So if you are looking forward to superior return and assuming risks, Prima is not a great choice.
The next fund is Franklin Prima Plus, which is a large cap, mid cap fund. How has it fared compared to peers in the market?
Prima Plus has been an above average fund, and it's a fairly consistent performer. But off late, there are certainly superior options which is available to investors. This is the kind of fund which most investors should have in the middle of their equity portfolio. This is the kind of fund which provides the diversification across all segments of the market. And so it is not the best fund in its category, but it's an above average fund, and it's a no-nonsense fund. This fund doesn't dabble into anything questionable. The quality focus also is visible in this portfolio. So I would say it's a good fund. It's not the best choice in its category.
Well, the last fund is Franklin Smaller Companies Fund, which in terms of returns has at best managed to match the benchmark. What is the advice that you would give to investors looking at investing in small cap funds such as these?
I would say this is an outstanding fund. This portfolio reflects some great choice, great selections, and picks, unusual picks. And I think the time has not come. This kind of fund, a micro cap, a small cap fund, actually comes to life or looks impressive for a brief period of time when the market gets into a different orbit. It has been through a bull run, and then these stocks turn out to be multi-baggers. And so at this point, for the kind of market we have been in the past 5 years, despite an outstanding portfolio, the numbers won't show up. This fund requires investors' patience, and then possibly that the kind of portfolio it's carrying, it might have multi-baggers hidden into it.
Well, thanks Surendra for joining us and giving us your perspective on these funds. We appreciate your time. With that, we come to the end of this edition of Meet Your Fund Manager. Do send us your feedback and suggestions. We'll appreciate it. Thanks very much for watching.
As the excitement is building up, let's find out which trading strategies our experts are adopting. Our guests for BNSN The Stock Game this week are Pankaj Jain, Kunal Saraugi and Sanjeev Agarwal. Catch the thrilling game of portfolio building on BNSN The Stock Game only on ET Now.
Brought to you by Thoda Simple Socho.
Hot stocks, hot technical analysis. Catch Prakash Gaba and Deepak Mohani every weekday from 10:30 a.m. to 11 a.m. only on ET Now. Always thinking markets.
Is life measured in trophies? In frequent flyer miles and miles per hour? In business brunches and timeline crunches? Round tables and corner offices? Or is life also measured in the lives we touch? Be remembered for good. Seagram's 100 Pipers, pure music, true legend.
Save up to 99% on every transaction on Sensex derivatives. Participate in the Sensex.
Good morning, Mahesh.
Good morning.
What's your idea of a healthy mouth?
No cavities, no gum problems.
But without germ buildup. Let's check. This is germ buildup.
But I just brushed.
Try new Colgate Total. It helps reduce germ buildup up to 90% and works for 12 hours. Have you been using Colgate Total?
Every day.
Now your mouth looks healthy.
Much less germs.
Colgate Total, 12-hour protection for a healthy mouth.
Sometimes things are more than they appear.
Wonder Nights. Every night at 9. Only on Movies Now.
Open and close the markets with the top technical analysts in the business. Ashwini Gujral and Mitesh Thakkar. Only on ET Now. Always thinking markets.
Maximize the mid-cap advantage with India's top-notch technical analysts Deepak Mohani and Prakash Gaba. Trade at a profit, whether bears or bulls are in charge. Only on ET Now.
This is the Times Television Network, and you're watching ET Now.